Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll take a look at the dollar, the yields, the precious metals, and all of the commodity ETFs and commodities that I follow. If you guys need any help with anything, you can definitely check out the finding-value.com website. You can use the word discount in the coupon code. Become a platinum member, and we do have a platinum member question and answer session tomorrow, 7 a.m. Mountain Standard Time. I'll see you guys there. We can bring questions, and I'll cover some of the things that are going on in the markets and what my opinions are, and maybe look at a couple of fractals together and go over some of those questions that you guys have. So let's dive in. I'll give you my financial opinion here. I've got the DXY. Looks like I lost my watermark here. So 1 second while I add back the watermark. So appearance, watermark, boom. So there it is. So there's the DXY. We've gotten a selling pressure day to day, down 0.22%, and a reversal candlestick. Generally, when you see these types of wicks at the top here like this, generally you get a little bit of a downward move. Now, I don't know how sustainable the downward move will be. It'll depend on how much selling pressure this gets hit with. And more than likely, we're going to see yields drop too. They are correlated. So dollar looks a little bit toppy in the short term. I don't know the strength of this move. We'll have to wait and see Monday and how much it sells off. This here is a topping pattern. So I am looking at this from a downward momentum. The short term here is against that grain. The 10-year yield down 0.4%. That also looks kind of like a reversal pattern. It's a bearish piercing pattern where we opened up and we closed down below the 50th percentile mark, roughly speaking. Generally, that indicates a short-term pullback in yields. The dollar is also, the DXY, I should say, the relative strength indicator, is also agreeing with that. We've got bond prices. Bond prices are also moving inversely to yields, and that's getting a nice big bullish engulfing. Looks like bond prices want to move higher. So we're going to see yields lower, dollar lower, and bond prices higher, which is all in, we'll say they're all talking together. They're all speaking the same language, and everything is jiving across those groups. So, and there's the 30-year yield also putting in a bearish piercing pattern where we could head a little bit lower in the short term. TYX, TNX ratio, basically flat. So looking at this data, the way that I would look at it, the curve is normalizing a little bit, and we have a weaker dollar. I'd say precious metals would be slightly stronger given this data. This is the CRB index, down lower today. I know that we had some selling pressure over in oil. We're going to go over that as well. CRB to S&P 500. Commodities underperforming the S&P 500, down 1.14%. This is a double top in the short term. And I do think that we are creating a wave 2, which is a pullback at some point where it bottoms at some point down here. We'll have to see exactly where that bottoms. Right now, it is just going lower in a channel, and it's channeling lower to the right side here. So that's that channel that we are in, heading lower. Gold up slightly, up $6. This is most likely a reversal candlestick ready to move higher. And what makes me say that? Well, one, it's a hammer candlestick, which is a reversal candlestick. Two, we've got yields putting bearish piercings looking like they could pull back in the short term. Three, we've got the dollar also doing that. And four, we've got bond prices, which are doing that on the TLT. So I do think that this is going to head higher. The question is how high, what's it look like, how much strength do we have behind it? All of that's going to matter because we haven't had much strength on the buying side. If this is weak coming up, it's going to roll over and come back lower. If it's really, really strong and we get some big, nice, fat candlesticks coming higher, the big green army shows up, then we could go higher. What this is basically all telling us is if we get large buying pressure in gold here in the next week, we could see potentially yields also head lower. If we get weak buying in this, we could potentially come up and kind of roll back over. Maybe we put in some sort of pattern that looks like that. Whatever it is. I don't know what it is yet, but we'll see. Silver is also throwing that bottoming pattern in. It's right on support. We were talking about 2150. It's at 2172. I said, there's your support line, and it is holding as support. This does look like it could potentially head higher if the buyers want to come in, if we've got a weakening yields. That is a good, strong possibility in the short term that we could go higher. Now, this obviously could do something like this, where it's an ABC correction. So we'll have to see how strong this bounces. Platinum also bounced a little bit today, up 2.25. But this still looks pretty weak to me. I mean, there isn't large green candlesticks anywhere. Look at the size of these guys. They're all teeny. The momentum and the look of this makes me think that we could continue lower in platinum itself. XAU to gold ratio, slightly lower, momentum's to the downside. I see no reversal candlesticks at this time. We've got GDX heading a little bit lower. That does look a little bit better. You know, putting in that wick at the bottom, it's a hammer candlestick. Again, there's not much sideways action here, and we've got a lot of downside momentum we need to work off. It's going to take some time. SILJ, we are getting a little bit of a hammer candlestick. We've got some momentum coming to the downside. We could see this try to turn back up, and we might get a couple of sideways action or something out of it. Crude oil down 2.82. We do have some good wick at the bottom here, which means that the buyers came in towards the end of the session and bought it back up. This is what it looks like. If we kind of zoom in on here, this is the buyers coming in, and this is your double bottom potentially with a lead-in pattern, double bottom. And this is, guys, this is on a 5-minute. Remember, those patterns are valid whenever you see it. So it does look like to me that we could potentially bottom in oil here on the short term, but we got to get some buying pressure here to kick us back up. That's what that wick at the bottom looks like. If we were to go back to the daily candlestick, this is the bottoming type pattern that it's trying to put in. But you have to keep in mind, though, this is on a daily pattern. So there's that wick at the bottom, and that's what that double bottom looks like. And we'll watch next week. We really need to break above about 81, I'd say $82. Let's round it to $82. We want to break them and go above that. Is this bottoming, or are we going to get further downside out of this? We have to see and wait, or we have to wait and see. See and wait and see, same thing. We do have this downtrend line that is broken there, but it's not a strong downtrend line. Let's not kid ourselves. It's 1 point, 2 points, and 3 points. It's a fourth here. So I do think that this has a good probability of being a breakout and heading higher. So I think everything's intact, and we'll see what XOP and all them are doing as well. Natural gas heading lower as well. This may actually have another leg lower, or we're just kind of bopping out to the downside. There's a lot of momentum behind this move here. We dropped massively. So what happens is, people talk about dead cat bounces and stuff like that. We have to have some sort of kind of bounce here that kind of slows this thing down, the momentum. And there's still momentum behind this move, which is still heading to the downside for natural gas. This will pull back, I think, some of the drilling rigs for natural gas. And we could see further downside in some of the companies themselves. It is possible. And even energy service companies if they're drilling companies. We've got XOP. Yeah, you know me. Down 4.3%. We're still in this massive pattern that I've drawn here. You could even, I'll even extend this one. So there's that line there kind of coming, but we could also extend the blue one upwards like this. It's basically the same line as this white one here. So that's the big trend line. We don't want to break that. We do have a little wick at the bottom, but it's not big. It's not really that convincing. If we take a bigger picture view, and the way that these things kind of work is they squeeze on up with higher lows, higher lows, lower highs into a corner. We do have some strong selling pressure. You can see that on these sell-offs, but they're becoming less effective as we go on. If we're not going to break, if we are going to break down, we're going to see continued selling pressure to break us out of here. That's not what I'm calling for. We need to see what comes tomorrow. The next trading session is what I'm saying. And that's the big down candlestick. It didn't finish all the way at the bottom. This to me looks like we could see maybe some sideways action. And then hopefully we head back higher. Why am I so biased to the upside? Because of the fundamentals, because of the market conditions, because of all those things. Now, could this break to the downside? It could. It could. If interest rates are high enough and they remain high enough, where the housing market, which we are seeing a little bit stronger, we are seeing lower housing starts out of it. If the housing starts continue to go down, we could see a bigger pullback in oil, natural gas, and commodities and precious metals in general, because that will slow down the credit expansion. That is a possibility. OIH also down 4.5%, matching basically XOP. OIH is the energy service companies. There we go. It's coming up. That also sold off today as well. What I look for is I look for these large selling pressure days here. We are getting them, and they are still out there. And generally what that means is that is a slowing of momentum to the upside if you start getting a bunch of them. The big picture view of energy service companies still remains good. That's what it looks like from a big picture view, and it still remains and looks good and solid, and we're still above kind of this longer term support level. So everything is still all right. It's not bearish by any means at this time. Looking at the Sprott Physical Uranium Trust, up 1.5%, actually looks quite strong, especially given that all the entire market was down across the board, kind of. But Sprott Physical Uranium Trust higher, it finished strong, looks strong. But we're going after that 18. Let's hope we can close above 1818. We got to stay up there. But right now, it looks really good. URNM down 0.85%. This is the uranium mining companies, and we're basically stuck between resistance and support. That support area is pretty strong. We've got lots of trading underneath us. And it looks like the resistance is also strong above us. So we're at that point where the buyers and sellers are duking it out, and we'll see who wins. TAN, which is the Invesco Solar ETF, we're right on support, and we are squeezing up right into the corner of this pattern here. So there's the pattern. There's us squeezing up, and I think we'll break to the upside because we entered it from the bottom side. COPX down 0.43%. Pretty much a win compared to everything else that I'm seeing. But we are kind of coming in some sort of consolidation type pattern. And we'll see if we break to the downside. We did enter this consolidation from the top side down, which generally means that we could potentially head lower from a statistical probability. Lithium also, we'll say, pooped out to the downside, but we put a little wick at the bottom here. Generally speaking, you put a wick, it's kind of like a bottoming pattern, inverse head and shoulders. Maybe we can break and move on up, but you can see the selling pressure early in the day. So could be kind of like a false breakdown for lithium, maybe. Let me go back to lithium. I don't know why it went back there. And then we pop down, and hopefully we can get some momentum to move back up. But we've got support underneath us, a little ways below us. REMX, rare earth metals, down today. This isn't a reversal candlestick necessarily. And we've got support underneath us, that blue line that runs across the entire area here of the double bottom if it decides to load. But we've got support underneath us, but we've got good momentum coming to the downside. This did not break through and run. The resistance is strong up here. I'll just say that. The S&P 500, let's look at the dailies here. This could just be it's just a flag pattern. And it hasn't broken to the downside yet, still looks all right. I'll leave that in there. I'll put more of a legit, actually, let's do this. I'll extend this out. It was turtle heading out a little bit, but that got kiboshed, something like that. The NASDAQ, so the S&P doesn't look that bad. It still looks all right. The NASDAQ down 0.6%, and that is also doing something very similar to the S&P 500. It's basically the same thing. We had a little breakout there, but that guy did not want to stay above. EEM also squeezing up. We'll see which way we break. Sometimes they do false breakdowns and then move on higher. This is very sensitive to the dollar as well. XHB, and these are sitting in areas that are broken out of downtrends. They're all still bullish to some extent. We're probably putting in reverse head and shoulders, and this is on top of a pattern as well. This is your double bottom. We're sitting on top of it, and sometimes we get stuck here, but it still looks very bullish to me. Just to let you know on EEM, let me throw another kind of guy down here. That's an inverted head and shoulders. We break out, we do a retest move, and then we break to the upside. I just want to make sure everybody knew that. Moo is also, it's still throwing like an inverted head and shoulders here too, almost. Something going across here. Kind of like a shoulder, head, shoulder, and we're just stuck there, right between support and resistance. But there's a trend line there as well. We've got copper. Copper future prices down 0.15%, and that is a bloody nose which is a continuation pattern to the upside. So we're getting some split information. Well, no, not really split. It's all bullish still. Broken out of its pattern, did a retest, and now it's just moving sideways and gathering itself before it moves higher. That's lumber. This is iron ore. Iron ore it's at 124 something, so it's actually, that's at 123, 124, what is it, the 17th? I put this out over here. I don't know why this doesn't update, but that we're at where the circle is, this one. So we actually broke out of that, and we are moving on up. It looks good. Nickel, slightly lower today. We're right at that support level. That's what it looks like. Coming on down, broken up, squeezed up, broke to the downside, and we're just kind of moving sideways right now. Aluminum, slightly higher. Again, we're sitting on top of support. Everything looks all right. Just got to be patient. Baltic Dry Index, down a little bit. The most recent day, it's got yesterday's on there, minus 2%. I still think this is incredibly cheap. We just got to be patient with it. And then Newcastle Coal, slightly lower, down 2.7%. And this is a breakout, kind of a retest type move on the long term. Ethereum, and we'll move it to the candlesticks. We'll go to the dailies. Ethereum and Bitcoin are looking really solid, actually. Nice big bullish engulfings. They look good to continue higher. Same with Bitcoin, and the money is flowing into those two quite generously. Those two are a function of liquidity in the market. We still have liquidity out there. They really like weaker dollar and weaker yields. So that's what Bitcoin and Ethereum really like. We're going to kind of, we've got some selling pressure today, but overall, most everything is broken out of downtrend patterns to the upside. We're just pulling back and doing retracements on it. So everything still looks pretty good to some extent. Maybe, if I were to look at it, precious metals, we'll see if we turn here. It's a possibility that we could turn and start moving on higher with precious metals. A lot of things are very sensitive to the dollar and yields. So depending on where they go is going to depend on where everything else goes. If yields go lower and the dollar goes lower, I think Ethereum, Bitcoin, gold, I think they'll do very well. Some of the other precious metals, they're more linked to other things like economic growth. And with China reopening, we have ourselves a mixed bag here with the fundamentals. The fundamentals of China reopening is highly bullish for commodities. Highly bullish. That's liquidity coming into the system for China. They've done their stimulus. Things are opening back up. And you can remember what happened when things, basically opened back up. It was highly inflationary and things really took off, at least in America. It's going to happen in China as well. Demand for oil is going to go up. All that stuff's going to go up for commodities and all this stuff. On the other hand, we're pretty tight in America in relationship to where we were. So we're a lot tighter than what we were back in 2020, 2021. So the housing market is slowing down. We've got the housing starts that came back a little bit. Actually, I'll show you that, guys, real quick. We can go to housing starts real quick. 1 second here. So housing starts is right here. There it is. We printed 1.309. So it's not super low, but it's also not very high. So we are entering kind of that average-ish area. And I didn't draw this in right, but it's somewhere right kind of where we're at. That's kind of the average-ish. Now, if we start dropping below that, that's generally where we start getting recessions. So if this continues lower, then we know that the credit expansion from real estate is starting to kind of dry up to some degree. Not dry up completely, but it's starting to slow down. So with that slowdown, we've got competing forces here. This is going to make it very difficult for people to figure out which direction we're going to go. We've got China, which is ultra bullish, and we've got America, which is also a large consumer of commodities and energy and stuff. The Federal Reserve is tightening enough where I think it's having an impact on the housing market. And if new housing starts continue to go down, we could see a slowdown in the United States. So you've got two opposing forces. What's going to win? And I'll be honest, I don't know which one's going to win because you've got two massive opposing forces. Last time we had tailwinds kind of from both countries at the same time. Now we've got conflicting ones. If I were to take a guess, I think China, with the ability of its, with how much it consumes in commodities, it's got a good shot of buying a lot of different commodities, but at the same time, those commodities are priced in dollars. And credit expansion weakens the dollar. So we have to continually watch all of this stuff. And I think it's going to be really difficult because you're going to have conflicting information here in the short term. If you guys like the content, give me a thumbs up. Subscribe to the channel if you guys haven't already. We'll catch you next time. This is Finding Value.